Mark Connolly and Rick Ray are registered representatives and financial advisors with Park Avenue Securities, a registered broker deal and investment advisor. The information you will hear on this show is for information purposes only, and individual situations vary. The information should be relied upon only when coordinated with individual professional advice.
Do you think there are forces out there that are keeping you from achieving your financial goals? Deep in your heart, do you believe the game may be rigged against you? If you do, you need to listen to Big Money, Big Daddy with Mark Connolly and Rick Ray. They'll teach you how to avoid Big Daddy's wealth-destroying tactics. The Big Money, Big Daddy show starts right now.
Hey, welcome to Big Money, Big Daddy. You are listening to us on AM 1110 at 1 p.m. We're going to have an exciting show today. I know we're a week out from Thanksgiving, which to me is arguably the best holiday of the year. For me, simply, it's kind of families in town. I come from a big Greek family, so when the holidays come around, we're all getting together. You know, there's great food. Again, coming from a big Greek family, it's lamb over turkey, so a little untraditional, but with that being said, good nonetheless. And of course the pies, right? I mean, who can argue that that's the best right there. And then even better is some football, and not even just the guys that are actually good on TV, but every year, like tradition with my family and a couple of my buddies, we play a little flag football that morning, rain or shine. In fact, the uglier the wetter the better. So just wanted to say we're going to have a good show today. I'm hoping you guys listening are looking forward to having a wonderful Thanksgiving as well. We're going to be gone next week, but we will catch you kind of the following. So again, with that being said, you're listening to Big Money, Big Daddy. This is Justin Makris from Wealth Design Group. If you want to get in touch with us, you can Facebook us at Big Money, Big Daddy. That's B-I-G Money, B-I-G Daddy. Or you can text us at 72727. With that being said, we've got an interesting show today. I know a lot has transpired in the last week, needless to say. The obvious being the many debates regarding kind of the future of our country with our new president-elect Donald Trump. And so really what I wanted to focus on today is, with all that being said, with all the stuff that's going on, with all the people may say chaos or anxiety or uncertainty or whatever it may be, I really want to sit back down and focus on kind of what are the principles of investing? What are the things that we want to continue to do no matter who our president is, no matter what the circumstances may be? With that being said, we've got a new guy. He is our president-elect. Things are going to change, hopefully for good for everyone, for our country and abroad. But again, one thing that should not change is the foundation and principles in which we invest in. And so that's what I want to cover today. At the end of the day, really what we're trying to do at Wealth Design Group, and really for our listeners today, is we're wanting to create that investing peace of mind. We want you to feel comfortable. We want you to feel confident with whatever it is that you're doing in the investment world. And again, the way to make that possible, and I can't reiterate it enough, is the core principles and the foundation in which we feel all investors should be investing. So the first really core principle and core foundation is own equities, diversify, and rebalance. I make that sound very, very simple, and I'll go into a little bit more detail in our second segment, our third segment. But at the end of the day, the only way you can expect to have returns in the market is by being in the market, owning stocks, owning equities, owning bonds. So you've got to own those equities. You got to diversify. You don't want to just own one stock, right? And then if you've owned multiple things, you got to rebalance because things are changing all the time in the market. So at the end of the day, the first core principle I want you all to take note of and always focus on, and what we focus on here at Wealth Design Group, is, again, own equities, diversify, and rebalance. Now, the second core principle, and to me one of the most important, and it's getting kind of into the investment philosophy and what I want to focus on talking about today, is returns come from the market, not an individual. The returns we see, the S&P and the Dow and the NASDAQ and EAFE, whether it's international, whether it's domestic, no matter where it is, those returns, again, come from the market, not an individual. We do not believe that there is one person out there that knows what stock you should own or when you should get into that market or who's the hot tech stock or energy stock or what's oil going to do or what, all the different things that we hear the talking heads talk about every single day on CNN and Fox and MSNBC and whatever news stations you're listening to. But at the end of the day, a core principle that you have to understand is the returns come from the market, not an individual. And so then we're going to talk about kind of then how do you get those returns. So that's the second. The third core principle that we always stick to is free markets work. So if we believe that returns come from the market, we have to believe that the market itself is able to be as efficient, is able to work, is able to be free, and able to capture those returns and generate those returns. And that is the case. When you have a free market system, a free market society, returns are there is no upside, right? Returns are always getting bigger and better and more and more. You can look at any chart, whether it's the S&P or the NASDAQ or the Dow, and you can look at it from the 20s to the 30s or the 30s till now or from the 50s to the 60s or whatever time frame you really want to look at. And you'll notice those trends are always up. And if you've noticed, will be our 45th president. We've had 45 different people ruling this, country and impacting not only us domestically but overseas. And if you look at the charts, again, it's always up. It doesn't really matter whether it's Republican, whether it's Democrat, man, woman, doesn't matter who is our president now or in the future, returns are always there because the free market is what dictates them, not an individual. So own equities, diversify, rebalance. Returns come from the market, not the individual. Free markets work. And then three things that I think line up together is, one, engineering matters. And what I mean by engineering is, yes, we believe in the market, but it's not as simple as you go and just buy an S&P 500 index, right? Because there's so many other asset class, meaning a place where you can invest your money out there outside of just large U.S. companies. So you want to own a lot of different companies. You want to own a lot of different asset classes, whether it's large U.S. companies or small U.S. companies or international companies or whatever it may be. So engineering, allocating into each of those different asset classes correctly does matter. And in summary, what I mean by engineering matters is the math and the science trump, opinion all day, every day. So engineering matters. And then not only does the engineering matter, but then execution matters, right? So let's say we build the portfolio correctly. We do our research. And again, I'm going to show you how to do that in these next two segments. We do our research. We know these are the asset classes we want to own. We put our money into one. We put our money into the other. So we've engineered it right, but now we have to execute, right? Execution is equally as important as engineering the portfolio. And I think the way that you do that is you work with a coach. Working with a coach matters. So at the end of the day, you need to work with somebody who shares in your values, shares in your beliefs, and has the same goal in mind, is not trying to, create commissions by selling you products or generate revenue by doing this or doing that. They really are on the same board and same surface that you're on, which is simply, I want to engineer a portfolio, I want to execute correctly, and I want to work with a coach, and that's what matters. So recapping again, you want to own equities, diversify and rebalance. Returns come from the market, not an individual. Free markets work. That's the best part of the whole thing is it works no matter what, man. Doesn't matter who the president is. Doesn't matter what's going on in this world. I like to take this year as a great example. We had an oil crisis, right, at the beginning of the year. And then after about a month or so of that, markets recovered. Then we had a European crisis. We had Brexit, right? It's going to affect the European markets. It's going to affect the U.S. markets, all this crazy stuff. And then what happens? It recovers. And then we had our election, right? And then we had our new president-elect. And for those who were staying up late and kind of watching how it was going down, it looked like the market was going to open down 500 points or whatever it may be. And world's coming to an end. Nothing's going to get better. Here we go. And then what happens the very next day and moving forward? Markets did very, very well. Markets will continue to do well no matter what, because again, free markets work. And then engineering matters, execution matters, and then working with a financial coach matters. And the very last one, which I think is a really important one, and one that we like to really use not only when it comes to investing, not only when it comes to building a financial plan outside of the investing world, but also just in our personal lives. It's almost more of a motto that we have here. And again, this is Justin Makris at Big Money, Big Daddy. I'm filling in for my partners, Mark Conley and Dale Pieper. But what we believe, what Mark, what Dale, and what myself really believe in here with Big Money and Big Daddy and at Wealth Design Group, and this last core principle is hard, easy. Hard, easy meaning most people go through life and they say, I got 10 things I got to do. I'm going to do the 9 easy ones first, and I'll save that hard one for last. So at least I get 90% of my work done today, right? The problem with that philosophy is then it makes life hard on the back end, or it makes your day hard on the back end. You know, when you're tired and you're running out of hours, and it just makes it hard. So we believe in the opposite principle, doing the hard things first. Hard, easy is the best way to approach not only life, but also investing. So in the investment world, it can be very simple, the idea of, all right, well, I'll kind of figure this out now, and then as time goes on, I'll start understanding what stocks I should own, or when I should get in, or when I should get out, or I'll address the risk and when the markets go down, when they go down. I'm not too worried about it now. You know, I think I've got a good portfolio. I'm always going to be making money. Or same thing when it comes to planning for the future and planning for retirement. You know, I'll address that later, or I'll save when I have extra money. You know, when my kids are out of college or when my kids are done with school, I'll be able to start putting more money away then. You know, that's kind of the I'm going to save the hard stuff for later, right? But at the end of the day, if you do the hard stuff now, if you practice financial hard, easy, it just makes your life so much better as you move forward, because then you do obviously the hard stuff now and the easy stuff comes later, right? So those are really kind of the core principles that I wanted to just bring up, and I want that to kind of lay the groundwork of what we're going to talk about in the next two segments. Because at the end of the day, it does not matter the environment that is going on around us, whoever our president may be, whoever has if you want to go politics, the House and the Senate and all that stuff. It'd probably be a lot more fun to talk about politics right now, or at least maybe not fun, but a lot more exciting. But again, it is an investing show, and so that's really what we want to focus on. And it does not matter what's going on around us. If you implement and practice these principles that should never change, again, owning equities, diversifying, and rebalancing is number one. Returns come from the market, not an individual. That's number two. Free markets working, that's the third. Engineering matters, that's the fourth. Execution matters, that's the fifth. Working with a coach matters, that's the sixth. And then hard, easy, the seventh. Then you'll be fine. Things will be good. Life will be good. Work will be good. You'll have that investing peace of mind, which at the end of the day, I think that's really the value that we create for our clients at Wealth Design Group. And I think that's really what really separates us from a lot of the other planning firms that are out there, is we really want you just to feel comfortable with whatever it is, the plan that we're putting in place, and knowing that we have a foundation, and knowing that this is kind of the way we operate no matter what the circumstances are, definitely creates that. Oh, and by the way, it works. You get great rates of return because, again, the market's always producing no matter what. So with that being said, stick to these principles. You'll have success. You'll have that financial freedom, and you'll have that peace of mind. So now kind of what my thoughts are and kind of what I want to transition to in the next two segments, so you definitely don't want to go anywhere, is segment 2, why are people unable to stick to these investment principles? Because some of them are things that you guys probably know and probably do, of owning equities and diversifying and rebalancing. And some of you probably do practice hard, easy and stuff like that. So segment 2 is going to kind of talk about why do we struggle to stick to these principles, or why is it that if you look at the numbers and you look at what the average investor is getting compared to the market, there's a huge disparity there, right? Over the past 30 years, so Dalbar is a company that's done research, and they've been studying us over the past 30 years, and they've essentially said over the past 30 years, the average investor is making less than 4% inside of mutual funds and equity funds, while the market itself is up closer to 11%. So why is that, right? I mean, why is there such a huge gap in the amount of wealth that someone should be receiving and the amount of wealth that they actually are receiving? So segment 2 is going to be talking about those things. We call it our myths to investing, those things that are out there that people think create value, but they don't actually create value. So I'll spend that segment talking about that. And then we'll end on a good note. I started us on a good note talking about Thanksgiving. I know we all can't wait. But then we'll also end on a good note by saying, okay, there's all this stuff out there that we don't want to do. So then what's the right way to approach this? And then I'm going to talk about kind of our investment philosophy and really what are the solutions to kind of all the different investment stuff that's out there. So that's really kind of the intention today. I'm glad you guys will stick around. If you have any questions, again, you're listening to Big Money, Big Daddy. And if you have any questions, you can call us at 713-826-0426. That's 713-826-0426. Or if you prefer text, you can text us at 72727. That's texting us at 72727. Or if you prefer email, bigmoneybigdaddy at wealthdesigngroup.net. So that's bigmoneybigdaddy at wealthdesigngroup.net. And again, we're on every Thursdays at 1 p.m., AM 1130. This is Big Money Big Daddy, and we will be back very shortly. Thank you.